Hi CTKS family. The biggest news that hit the markets in the past trading session were NVDA's earnings. They blew the street away and they caused a broad-based rally in the S&P 500, the Nasdaq. We saw Apple and Tesla come up, as well as Microsoft and MicroStrategy. NVIDIA means that the AI revolution is here. It's profitable. It is not hype. This pushed the main markets into extreme greed territory, and extreme greed is not the best thing to do. When there's a lot of euphoria, people tend to be subjected to quite large sell-offs, so just be a little bit careful. But one of the core concepts with NVIDIA, the Magnificent Seven, is back on the radar. One thing to keep on your radar as well, in the next FOMC meeting, we've seen the decrease of the percentage of an easing. This is placing a lot of positive momentum on the US 2-year and the US 10-year, which is bringing gold down and silver's continuing its negative price action. This has created a bit of a mixed bag in terms of the crypto industry. We've seen total crypto market cap and Bitcoin come up. And we've seen broad-based consolidation in Ethereum as well as ADA and Doge, and also in terms of Litecoin's price action. But there is still a degree of negative price action inside Solana, Bitcoin Cash, AVAX, and XRP. This is primarily due to the yields coming up. What's really interesting is the DXY has not come up, and we've seen the euro and the Aussie dollar still being strong, and the Great British Pound versus the dollar also being strong. One thing that I really want to get into is Apple, Tesla, and Bitcoin in terms of the structural levels. For a few videos, I've talked about Apple's price action, and I drew up a bit of a fractal. We can see that that fractal is coming true at the current time, and that's not surprising because there is a lot of structural support below Apple's price, just down in this area. I'll just pop on the indicator from the service. You can see that there's literally bulletproof levels of structural support underneath Apple's price from about that 178.45 upwards to around 179. This is quite important. Apple was coming down, and that was bringing the main markets down. Knowing where the structural levels are is an absolute game changer. When you have a lot of structural support, you expect price to come down and then retrace away from that, especially when we had such negative price momentum in terms of Apple's price. This is why I'm saying just be really careful of identifying where the structural support and where the structural resistance levels are. It literally gives you X-ray vision into the markets. To help quickly explain that just a little bit further, let's look at XRP. When you look at XRP like this, you would be pretty hard pressed to know where XRP is going. And this is of course a live chart. But when you understand structure, everything changes. You can see that XRP is obeying structure. You will find this literally with all charts. If a chart can't get through, if the price can't get through a structural resistance level, and here XRP, that 55-cent level was pretty traumatic. XRP couldn't get through it, and you've seen again it couldn't get through it, and again it's having trouble. And what happens when the price can't get through a structural level? It goes back to the one below. It often consolidates, trying to attack it again. You often get these fake outs, and they depend on market price action. Right now, XRP looks like it's going to breach the 55 mark. But always have your three-dimensional strategy in play at all times. And now, why do I say it's looking like it's going to get through this level? If we look at past levels, it's come down fairly hard. It was a fairly fast sell-off. What we're seeing here is a slight change in the direction of the sell-off. And also, if you notice on the cheat sheet, a lot more shorts have been liquidated than longs. Tesla recently had a huge sell down. But that sell down pressure is always caught by structure. Let's just pop on the indicator. When you know the structure underneath a specific chart, it changes everything. It literally gives you X-ray vision. Tesla had incredibly strong structural support between the 188.80 mark and the 193 mark. Even though price came down into this structural area, it was rebounded, and we can see that it's starting to consolidate above that. There is a strong possibility Tesla is heading to the 206 level. When looking at the crypto market, it's really helpful to understand as Bitcoin goes, so too do the alts. This is the thing that plays out inside crypto. No alt can escape Bitcoin's gravity. And here we can see the alts playing against Bitcoin's gravity. It's very obvious, well, at least it should be obvious, that Bitcoin controls the alts. A lot of people don't want to hear this, but it's just a statistical fact. But that doesn't mean that the percentage movement in Bitcoin is the same as the percentage movement in, say, Binance Coin. We've seen Binance Coin really take off in the past trading session. What you will see with the alts, and this is why we love the alts, if Bitcoin is moving up, the potential for the alts to move up in a far, far greater manner percentage-wise is always on the cards. That's why we love them. And you can see what's happening here with gold. The increasing yields has spiked gold's price down, and of course silver's as well. In around 54 days, the Bitcoin halving is upon us, and that is an expected date of April the 17th, 2024. One thing to bear in mind, what we've seen in past halvings, when Bitcoin's price comes up to the halving, the difficulty for the miners exponentially increases. Now, when it increases, it becomes much more expensive for the miners to get their block rewards. Also, their block rewards halve, which is a big problem to miner profitability. Because of this increase in difficulty that the halving brings around, many miners go bust and they are forced to sell their Bitcoin. Just something to bear in mind. When looking at Bitcoin's price, you can see how important it is because the alts just naturally follow the direction of Bitcoin, over and under exaggerating percentage movements. So knowing where Bitcoin is going is really quite important. Let's have a look at the indicator to see where the structural levels of support and resistance are. The powerful thing about looking at structure is it gives you X-ray vision on the chart that you're looking at. For example, we've seen Bitcoin literally trading between this range, down around the 50,800 mark, seeking to get over the 53,000. This strong support, this strong structural support has managed to maintain a floor on Bitcoin's price. And these structures are marked up across all of price history, 5,200 days plus. By doing the cheat sheet, you gain the capability to understand that all markets are intercorrelated and interconnected. At the current time, the increase in the US 2-year and the US 10-year yield, in fact they're both on a rampage, is causing weakness inside the crypto market. Fortunately, the stock market is buoying the crypto market up on the AI hype, and it's not so much hype anymore. If we continue to see yields just going up and up and up, we would anticipate that Bitcoin could break this 50,800 level. There are levels of structure below this, but be prepared for that. If the yields start to back away, we would expect the bulls to maintain control and push the price of Bitcoin at least to that 53,200 mark. You'll find that as a crypto trader and investor, if you keep your eyes on the Forex pairs, it will serve you incredibly well. When the Japanese yen tends to come up, dollar yen tends to come up, we tend to see negative price momentum inside Bitcoin. When the yields at this current state of the economic cycle, when the yields are coming up, that's not so good for Bitcoin. You can see when the US 2-year came down, Bitcoin was coming up. The 10-year came down, Bitcoin was coming up. Now we notice the inversion of that relationship because when the 10-year and the 2-year come up, they're making the price of money more expensive. If we find that the GDP across different countries starts to improve because of AI, then the yields and Bitcoin can move together as we've seen in past cycles. But until that happens, just bear in mind this negative or inverted relationship between crypto prices and the yields. Please keep your eye on the yields. The big positive for the crypto industry is that Bitcoin and crypto is also a technology, so it also follows the major indices, as well as inverting on the yields. And we can see the S&P 500, the Nasdaq, the Dow, the Russell 2000. They've staged a really good, really positive comeback in the past trading session. And you can notice there's a little bit of negative price action eventuating on the futures at the moment. What is happening to Bitcoin just at the moment? You got it. It's coming down. This is why it's important to look just not at crypto, but across all the markets. And it doesn't matter if you're in commodities, if you're in Forex, if you're in anything, you must look across the markets. They're all intercorrelated and interconnected. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.